The biggest risk to invest in 2022. In this video, I'm gonna be going through what I think is the biggest risk to invest in, why I think that's the case, what we can do about it, and finally I'm gonna go through other responses that I got from people on Instagram and Twitter on what they think is the biggest risk to invest in. So to get straight into it, what I think is the biggest risk to invest in 2022, the cost of living crisis. Before I get into why, let me just give you a few facts.
Knowledge.
And after these facts, you'll probably see how profound the impact of the cost of living crisis is going to be, particularly on people's pockets and what they're able to invest every month. First of all, inflation, which is currently 7% in the UK and is expected to be more than 10% by the end of 2022. That is massive and the biggest inflation since the 80s. Number two, interest rates. The Bank of England have increased rates from 0.75% to 1%, which is a 33% increase. But more profound than that, interest rates were 0.1% this time last year. So gone from 0.1% to 1%, which is a 1,000% increase in the space of 1 year. This is gonna make things like mortgages much more expensive, and obviously millions of people in this country have things like mortgages and credit cards, things that are tied to interest rates. Importantly, when there are changes in interest rates, there are disproportionately negative consequences. What I mean by that is, when interest rates increase, in this case by 0.25%, even though savings accounts may increase by the same amount, although there'll probably be a lag, things like mortgages will probably increase disproportionately, and they'll increase by more than 0.25%, taking more money out of our pocket compared to any gain we may make from higher savings rates, if that makes sense. Interest rates now are at the highest level since 2009. Number three, energy. Everyone knows about the energy crisis. Energy rates have increased on average by 54%, which is in effect from April 2022. And there's gonna be another massive hike in October 2022. So energy prices are nearly gonna double, increase by 100% across the rest of the year. Number four, taxes. National insurance has already increased as of this month from 12% to 13.25%. That is more than 10% increase, and that is a huge tax hike. People think it's only increased by 1.25%, and it has, but the movement from 12% to 13.25% is a 10% increase, which is once again a huge tax hike. Not to mention dividend tax has also increased by 1.25% as well. So for a bit of context, there are the four main things that I see: inflation, interest rates, energy, and taxes. But of course, the cost of living crisis, things are just generally more expensive, and it links back to mainly inflation. Food is more expensive than ever. Things like pasta and rice, even basic versions, have increased by 300-400% over the last year or two. Eating out costs more, going out costs more, any sort of subscriptions cost more. Netflix have increased their price from I think £10 to £11, which is once again a 10% increase. Only £1, but in percentage terms, that's a huge increase year on year. Pints now in London pretty much cost a minimum of £6, £6.50. Everything is becoming more and more expensive as time goes on, and that is all encapsulated into the cost of living crisis. So why do I think the cost of living crisis is the biggest risk to invest in?
What a stupid question that is.
It's probably a bit self-explanatory, but as everything is going up, the prices of everything, that takes more money out of our own pocket, more money from our paycheck every month, which means we're left with less discretionary income, so there's less that we can invest. Inflation and interest rates have been low for a number of years, which has benefited investors because it means we have more money in our pockets we can invest, and now the exact opposite is happening. We're gonna have less money in our pockets from our net pay each month, so less able to invest that money. And the most important thing when it comes to investing is contributions. Compound interest will generate most of our wealth over the long term, but that takes years, if not decades, to see the real benefits. Today, the main thing and probably the most important thing we can control is our contributions. The more we can contribute today, the more that money is going to grow over the long term. And if we contribute less today because of the cost of living crisis, that is going to affect our investment pot over the long term. Not to mention, generally speaking as well, wages are staying stagnant or are not increasing by the same rate of inflation, which once again means we're worse off in real terms because our wages can buy less and less of the same products, and there's a risk we won't be able to invest as much as we could before or as much as we'd like to grow our wealth and reach financial freedom and retire early. So what can we do? Probably the most important bit of the video, and I'll quickly chuck up a tweet of mine that I tweeted out a few weeks ago, which I thought was quite funny. A few suggestions, obviously that's satire, but the first thing really is ultimately try and survive. I know for a lot of people, the cost of living crisis is gonna almost make it impossible to get by month to month. And ultimately, being in a position where you can invest is a luxury, even if you have to cut back your investments or how much you'd like to invest per month slightly. Surviving is obviously the most important, particularly in tough times. So if you have to reduce your investments even to zero to try and survive, then that is completely understandable and obviously the sensible thing to do, because as I mentioned, being able to invest anything per month is a luxury that your income is high enough to be able to do that, as a lot of people can't afford to invest because they're simply just trying to get by and survive. Number two, try to make some cutbacks. If you can reduce things such as subscriptions, maybe start buying unbranded food rather than branded food. Maybe if you spend a lot of your disposable income on clothes, trainers, going out, eating out, you can cut that back slightly. Of course, those things will probably bring you joy, so you don't want to really cut them back to zero, because if they make you happy, you want to do them.
Obvious.
But at this point of time, with the cost of living crisis and all the context that I give, is probably a good time to try and make cutbacks to meet the increase in cost. If you're on a variable rate mortgage, your interest may go up, taxes have already gone up, inflation is continuing to increase the price of things we buy every day, energy bills have increased by 54%. We need to meet these costs, which means you need to try and make cutbacks to meet them, and it may mean giving up a few extra things each month to meet the rising costs. Number three, increase income. I feel like all these 3 points I've given here are fairly obvious, but they go without saying. Increasing income, in my opinion, is the best thing you can do for your personal finances and when it comes to trying to retire early, because obviously the higher your income is, not only the more fun you can have and you can buy things that you like and you want, but you can also invest more as time goes on and reach financial freedom quicker. If you are able to increase your income, whether that's through getting a promotion at your current job, moving jobs, getting a second job, starting a side hustle, whatever it is, if you can try and increase your income, that could almost help cover the costs of the cost of living crisis, as well as helping you to be able to still invest the same amount that you're currently investing per month. There are other suggestions I can give, but to almost bucket what we can do into three main categories, I would say simply survive, try to cut back your expenses, and increase your income. If you can do all three of those things, whilst it's still probably going to be a tough year and maybe years, you should hopefully still be able to invest over the course of the year. Now, finally, looking at social media, I tweeted that I think the biggest risk to invest in this year is the cost of living crisis, and I was interested to see what other people would say. So here are a few of the answers that I got from Twitter and Instagram. And of course, if you're not following me on Twitter and Instagram already, make sure you do that. The first response I got from the secret accountant was sitting in cash. What they're alluding to here is, of course, if you're in cash, your money is being eroded because of inflation. If inflation hits 10%, then your money is going to start losing value very quickly if it's just sitting in a bank account. For simplicity, inflation is currently at 7%. When inflation is at 7%, your money that's sitting in the bank in cash loses half of its value every 10 years. So at 10%, you can imagine how much quicker that money is going to lose value. Although a couple of good comments here from other people is that cash has actually outperformed the S&P 500. Didn't realize that, fair enough. And also cash feels safe, which what I was alluding to there in the sense of trying to survive, because you need cash to survive, to pay these energy bills, to pay higher mortgage rates, and so on and so forth. We got another response here from Christina saying volatility, which essentially is going to affect investors. Of course, when it comes to investing, the stock market is a roller coaster in the short term, but if you're using broad market index funds, it generally goes up over the long term. So the best thing to do is almost ignore the market, ignore the noise, and carry on buying and holding. Another response here from the Cockney Rebel, also alluding to the fact that investor sentiment is the most important. Investor sentiment and fear and greed essentially drive the market, which is why, once again, it's so important to almost just ignore what is going on in the market, continue buying and holding, stay in the course, ignoring the noise, all of that advice that I usually spout in these YouTube videos.
Just do it!
So now heading over to Instagram, I got a few responses here, so I'm gonna go through a few. Quite a few people have said volatility, losing money in the market. Miss Amelia Rose, Harinder, and Lynchy London have all said that. Volatility, putting people off. Essentially, what I get from that is, if there's volatility, people's investments begin to fall, they then panic, sell them, and they get scared of the stock market, and they're gonna miss out on gains over their lifetime, which is a huge risk to invest in, and that's a great point from these people. Every Quid says global supply chain issues, linking that back to the war that's currently going on between Russia and Ukraine. Another huge risk to invest in, and that's also causing partly the cost of living crisis. Jay Blue says the biggest risk is not investing. Ultimately, that is true. Even if there is going to be drops in the market, the best thing we can do is carry on investing and then buy and hold. Of course, stop waiting, start investing. But as we mentioned, it may not be possible for some people to invest right now, and that's completely understandable. The most important thing is to survive. But if you are able to invest, carry on investing, and if you haven't invested yet, if you're able to, start, and your money will grow over the decades that come. I'm gonna leave it there. That was a few from Twitter and Instagram. Thank you for everyone who did submit answers. Let me know what your answer is, the biggest risk to investing, in the comments below. Thank you for watching, and I'll see you in the next video.